Well, hi traders, we've seen the RBA statement and the statement of monetary policy coming out for the market to react to, and clearly the market was looking for a more hawkish reaction and a hawkish turn in the commentary, a more explicit roadmap to get us to hikes to August or September, where the swaps market was pricing about a 45% chance of a rate hike playing through. Now, of course, we've seen rates being kept on hold today at 4.35%. That's not going to really surprise too many people out there. The swaps market was giving about an 8-10% chance that we did get a hike today, so the fact that we've seen rates on hold shouldn't surprise anyone there at all. But I think the market was anticipating that clearer roadmap, and that was driven by a stronger employment number recently, where we've got employment at 3.8%, and also, of course, the Q1 CPI print, where headline inflation's running at 3.6%, and of course the trim mean numbers running at 4% as well. But it was the problematic areas of inflation which I think the RBA have looked at very, very closely, and where we've seen services inflation running at 4.6% and also non-tradables at 5%. And the RBA in the statement today did talk about the gradualism that they're seeing, the frustrations they're seeing in the falls in services inflation. They've also talked about the idea about and shown a greater concern about household consumption. So there were some wide sweeping changes within the RBA statement, but it didn't give us that explicit roadmap that we were anticipating given what we've been seeing in that CPI print. And there has been a reaction coming through in markets. We've seen the Australian dollar, which was trading around 66.27, drop below the figure, so not huge, but we have seen a few buyers stepping in below the 60 cent handle. There's been a bit sort of a more pronounced move in the cross rates. Now, Aussie Kiwis had a really, really strong move up and above 110 recently, but that's dropped 40 pips or so. We're finding a few buyers stepping in now. We've seen a bit of a move in the Aussie down against the sterling, against the yen and some of the other cross rates as well. But the Aussie is now finding a few buyers as we go through the day. We've also seen a big move coming through in the front end of the Aussie government bond curve. You know, Aussie 3-year government bonds have dropped about 8 basis points. And really, if we look at rates pricing now for the August meeting, we've got about 8 basis points of hikes being priced in there as well. So the market is saying on balance that we still expect hikes to an extent, or we're certainly more likely to get hikes in August than we are get cuts. But that's certainly going to be driven by the data. Now, the RBA in the statement have made it very, very clear they're still data dependent. Now, the data that gets us the hike or continues to see us trade higher for longer throughout the year is really going to be driven by a number of factors. We've got the wage price index, which comes out next week. The RBA will be looking at that fairly closely. We're going to get 3 more employment reports by August. We're going to get 2 monthly CPI prints, and then the big one that comes out on the 31st of July, which is the Q2 CPI numbers. Now, if we have a look at the statement of monetary policy and especially what we're seeing in the economic projections and their new estimates, what's interesting here is while we didn't get that explicit upgrade and that roadmap, perhaps they could have justified that given the pronounced nature of the moves that we've been seeing. If you have a look at headline inflation for the June quarter, they've taken that up 50 basis points to 3.8%, and they've taken their trim mean number also to 3.8%, which is a 20 basis point increase there as well. So some pretty hefty revisions, and we've seen some wide sweeping revisions to the December quarter for the end of the year, and also for headline inflation for 2025 as well. We've seen some upgrades to the unemployment rate. They've seen the unemployment forecast taken down 20 basis points to reflect the strong recent unemployment numbers. So that could have justified a much more hawkish reaction from the statement, but that didn't come, and it considers to be quite neutral. Now, I quite like buying the Australian dollar into pullbacks. I think it goes higher, certainly against the Swiss franc and certainly against some of the other cross rates. It's not just a rate story where we're still pricing in an element of rate hikes relative to a lot of these other central banks, which are expected to start cutting rates soon. But we've got terms of trade working well, with iron ore futures rallying hard, copper futures rallying hard. The Hang Seng's in beast mode at the moment, and that's a really good proxy for Australian dollar. And also, we've seen lower volatility in financial markets, which favours the Aussie dollar as well. So a less hawkish reaction from the RBA statement, but I quite like buying the Australian dollars here. I think it goes higher on the going forward.